Hey guys, welcome back to the channel. Well, it's time for our monthly update. We're looking at December, the signals, the indicators that are showing what could potentially come up for 2025. We're going through the stock markets, the real estate cycle, Bitcoin, and the crypto cycles as well. Make sure you hit that like button, subscribe to the channel. This is a series that I've been doing for a number of years now, reviewing the data for the month ahead and then attempting to give us a roadmap for the next several months. We have an agenda for today, going through a lot of information, so it could be a little bit heavy, but hopefully I can make it as entertaining as possible for you guys. The main focus, of course, is on the crystal ball here, the 18.6-year cycle, basically getting us into the markets at the lows when people are freaking out about recessions, and then hopefully getting us out somewhere near the tops when there is a lot of greed in the markets. It's your home of macro cycle analysis. As I said, we're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. 24 hours left for the Cyber Monday sale. I will give you that detail later on. But for now, let's just kick it off with the agenda. So forecasting here, 11 months on, looking at what we had anticipated for 2024. And then I'm going to dive deep into a lot of interesting data points here that I have for you guys. So first things first, there were these unpopular opinions. I cover this every month just to see whether we're on track. The first 13 out of the, first 12 out of the 13 have basically been on track. I'll let you review those rather than spend more time here. The only one that has been off was the ETH outperforming BTC, but it seems like ETH will close higher than it opened, but just not against BTC. That could be coming, as I've got for us later in the video just down here. Now the 18-year cycle is definitely well and truly on track. I think a lot of people are really starting to see how this has played out year after year. Obviously 2020 was a recession and the market's been up. Now of course this is not correct. This one here I was reviewing because I posted this back in January of 2024. So nearly 12 months ago. We are somewhere in this zone now. So we're definitely into this winner's curse phase, which I think is going to help push a lot of these markets over the top, including our beloved Bitcoins, our beloved ETHs, and our beloved altcoins as well. So still a lot more emphasis on further upside with the 18-year cycle. Now, we've got traditional finance. We'll have a look at the S&P 500 and the real estate cycle as well, just looking at a few charts. This one is quite interesting, just looking at a few data points, just looking at a few numbers in terms of what happens before, looking at some history. What does that mean for the month ahead? Stocks up 5% in November is a good sign. S&P performance after greater than 5% monthly gain. So looking back 70 odd years, these are just for me, I find them like fun data points. November was up. What does this mean? Well, the next 12 months are up 12.8%. Not 12.8% of the time, they're up 12.8%. No, that's if November is up. December here as well, looking quite good. It's higher 72.7% of the time. And then overall, you got 83.8. So still the outlook is still quite bullish, even though things seem overbought. And there's a lot of hype around the markets. And I've got something for you in the short term just to add in here for December, because we like to break down the month as well in terms of a roadmap. Up in December, 9 of the past 10 election years, going back to 1984, obviously the data all the way up to 2020, that was the last election year. You can see 90% of the time December is up. And how much is it up? Roughly 1.3%. But as I'll show you, I don't think it's going to be straight up. There could be a little dip coming to December, as I'll quickly show you here on the charts. Now, I'll turn all these back on and throw on the volume, because this is something that we've found out when the market rises up. Essentially, the theory is you need to have enough volume supporting the price. The price can go up, but typically it'll come back if there is not enough volume supporting that move to the upside. And I showed this through August, September, October, and of course November. And we're starting to see that again. Look at the volume here as the market rises to new all-time highs. Yesterday was another new all-time high for the S&P 500. But you can see the volume also starting to drop off. And this often comes up with other indicators that people use, like their momentums, their RSIs and things like that. The thing I think that people really miss when it comes to RSIs is they expect it to crash from that point. At least that's the way I see the analysis being presented on X or YouTube. They think as soon as the RSI starts to show a downtrend, then it's time that the market has to crash because the relative strength is not there anymore. And the way I look at it is basically the volume being part of the strength, and then the move to the upside, which is beginning, looking like it's getting smaller and smaller, is essentially the relative strength and how that index can be made up as well. And it could just come back to fill in that volume price gap. So getting enough volume to come back in to then support the price again in terms of wherever the market sees that strength lying. And where do we see it? Well, we like to use our 50% level, starting with the shorter term timeframes. Here are previous tops, here are previous bottoms, which it has tested on reasonable volume as well, above average in that case. So maybe it does need time to test those levels. But that's the short term for December. So I've given you a few data points here already for the overall cycle. I still think things are longer term bullish. That could mean months, and of course looking at roughly 12 months as well. But in the short term for December, as I said earlier with one of these pieces here, there is this weakness beginning to show with this sort of lack of interest to the upside. It's still going up, but just not like it has done in the past with strong moves, retests, and more strong moves. So that is the short term for the the S&P 500, and then the longer term as well. The NASDAQ is also looking similar in that instance. The volume is also dropping off. Hasn't reached the new all-time high like the S&P, but still in a strong position overall. We haven't seen any breakdowns of the 50% levels, and we haven't seen any breakdowns on the monthly swing chart as yet. So 50% is important, and the swing chart is important. I'll get to these numbers in the next few charts. So the numbers will be quite important for BTC. So overall, things are still looking good. What does it mean for December? I still think there's further upside, possibly a green December, but I don't think it's going to be straight up. I think there's going to be something that will fool people to think that, well, this is it. This is the time that we get the peak and then the correction. The Dow Jones, again, new all-time high price. And the monthly swings are doing very, very well here. You can see they've basically kept anyone who's following the swing indicator in the trade for quite some time. Volume is slightly dropping off here, which of course is affecting some of those RSI indicators. But until you get any breakdown of key support levels, 50% levels being one of those, and the swing levels, then there's not really too much to be concerned about. Just keep following the trend. There's been enough fear through the entire move to the upside, and people are finally, I think, starting to get the picture that it's a bull market, but it typically comes too late. But within that period, I know there's a time when everyone is right, and that pushes the market up into that peak. So they're basically worried for most of the time, and then finally they enter the trade way too late, and you can see it basically didn't do anything from that point, and that's a nice clear run up. Same sort of thing here. It's just grinding, let's enter, and then crash back down on them. And I think that's happened again. You can definitely sense it in the market sentiment, where it's just been recession calls. We're getting to another recession now. There's got to be a correction here because everything's overbought. I think that's going to flip on their head and continue. It's already happened, but continue to destroy people as the markets head higher. Markets around the globe, as we're still seeing new all-time high prices here for a lot of the countries around the world. I'll start with Australia. New all-time high today, new all-time high for November, an all-time high monthly close. A lot of you guys are watching from Canada. New all-time highs over in Canada as well. New all-time high closes for the month. Swing charts are still up, breaking to fresh highs. The UK, not at the high yet, but trading around those highs and looking like it wants to break higher yet again. Germany, someone tell the Germans that the market should be crashing. Again, new all-time high prices. And it's been something that we have been covering now for years, just continuing to follow the charts all the way to the upside. And this is the 18-year cycle. This is what this is about, right? You got the move up, everything continues to go, and you're still seeing higher and higher prices. yes, you're definitely going to see people draw these sorts of things on your charts, your upwards wedges, which typically spell disaster, typically spell a big correction to the downside. But while the trend is up, just keep following the trend. And what you can see from these types of moves, if you draw them like this, you can get corrections, but provided they don't break down from the key support levels, well then that's just how that strategy or that indicator, that pattern plays out. It corrects and then you begin to build again to the upside. So we'll jump down to Asia. We've got the Nifty in India, not at a new all-time high, but pretty much trading around those highs and then holding up above the 50% level. So it's still strong. You've got China, which had a massive September, big correction in October, and now balancing out in November. So it's just like a rubber band. It gets pulled one way, snaps the other way, snaps back, and then tries to find some equilibrium before it attempts its next move. So here's an interesting part about the time frames here. And this is going to be important when we look at Bitcoin as well. You can see the move to the upside, the move back down, and it's holding above the previous tops, at least for now. Ideally, you want to see this thing get back above the 50% level, which is roughly around 13,500 points. But while it's still above the swings, everything is still basically on track with an uptrend, higher highs, higher lows on the swing. In terms of the timing here, all right, so let's get rid of these numbers. This is your Gann Swing Pro. I'll bring those up on another chart, but basically just down here, the bar count, we'll turn that off. The time frames from the low to where this move ends. This could be an important part, and it typically happens before the US ends as well. You got the low to the high, 14 months. So I'm on a monthly chart here. The China bubble, 2015 low to the peak there in 2018, big correction after that. Trade wars happen, and then it goes on another move. That one there was 29 months to the upside, 25 months to the upside. So if you can do some quick numbers, 14 is roughly half 29, 14 times 2 is 28. And so you got a 14-month move, 29-month move, 25-month move. What are we going to get this time? Well, if we have a look at 14 months, that'll take us through to Q1 of 2025. So now we're trying to do a little bit of forecasting into next year. If this is just like a quick move and it's all over, then look towards Q1, Q2 of 2025. If it happens to do something similar to the previous two bubbles, say for China, then I'll be looking at 25 and 29 months, taking us through to February of 2026, that is, and June 2026. So again, Q1, Q2, call it the first half of 2026. What does that remind you of? To me, it reminds me of the 18-year cycle, somewhere coming into those peaks. So we're starting to get a few time frames that we can now follow towards the end of the cycle, which is getting pretty damn interesting. On top of that, the US dollar has also closed very weak on the month. November closed extremely weak, down underneath the top of May 24 and the tops of October 23. In 2023, it got rejected twice at the 50% level on the weekly chart. And now I would call that a rejection because the monthly closed quite low. It closed underneath 50%, underneath those both of those tops as well. So the invalidation here is if we start to get a push higher and some closes above all of these levels, that's going to be strong for the US dollar, potentially put some pressure on the other assets. Bitcoin hasn't been too phased about this move so far from October to November. But otherwise, if we start to see some time here where it takes some time to roll over, I think that's going to be okay. And then that basically continues on with the trading range and the second half of the real estate cycle where we expect the US dollar to begin weakening. Taking a look at the forward returns dashboard for the month of December for the S&P 500, most people will be pointing towards December being one of the best months for the S&P. You can see it is at 73% positive returns, going all the way back to 1900. So basically, 73% of the time, December is green. But within that, as I showed earlier, I think there could be a correction, and that might be what's happening for Bitcoin right now as it begins to, it's been pausing now for about a week and a half. Now, one final long-term outlook here for the S&P 500 before we crack on with Bitcoin and altcoins is the quarterly chart for the S&P 500, just looking at how many quarters the market can go up in the green. Because I think it's quite important to remember that if you're in a bull market, just keep riding the trend as long as possible. And you'll always hear people saying it's overbought and it's time for it to crash. But just looking back at the last several times that the S&P 500 has gone on a bull market here, you've got 8 quarters in a row into the peak of 2022, January 2022. You've got 5 into the peak before the COVID crash. You've got 7 in that peak. This is basically no swing bottoms or no lows getting taken out. No lows getting taken out, that is. You've got 2 here with a minor drop, but then closed green. So that's what this one is right here. You got 2015, which was the red year. And then prior to that, 11 quarters in a row without breaking the low. You do see 2 red quarters in there, but none of the lows were broken in that move to the upside. And then while you're underneath the old all-time high, 5 and 3, just like what we saw in 2023. So we got 3 quarters in a row correction, but then that closed green as well. So just looking at the probabilities over the last 20 odd years, you can see that we've got a lot of streaks of quarters in a row: 8, 5, 7, 11, 5, 2, 4, 4, and 1 into the peak, which I don't think we're at. We've looked at that before. And then also another 5 here. So this can go on another quarter. So quarter 1, quarter 2 of 2025 could be a place to look out for when it comes to any sort of red or maybe a swing down, which turns the swing indicator down, potentially putting in another higher low before the market continues on into that final peak. Now, that's everything covered for the traditional markets, but if you do want to grab a little more, this is coming out today, our free crypto and economic report. We've got the real estate cycle. We've got more on the S&P 500. The Cyber Monday sale ends tomorrow. You've got 24 hours left. Bitcoin and the altcoin season as well. Lots covered here. Make sure you grab that. It's a link in the top of the video description, and you also get the Cyber Monday sale when that's dropped for you guys this afternoon. Here it is: name, email address, tick one of these, and away you go to subscribe. So that takes us over to Bitcoin, what I think a lot of people are here for. But as we say here on the channel, it's always important to cover all of the traditional markets as well, because you're not going to see these risk assets pump without understanding what's going on elsewhere. And I think it's just a good way to continue to build your knowledge as an investor or trader, to make sure that you are abreast of how things are going on, because you'll just keep hearing about this shit for the rest of your life. You'll keep hearing about the markets, the stock market, so it's crashing this time, or it's something's going wrong. But really, when you just take a second to have a look, 15 minutes, 20 minutes with me at the beginning of a video, it's really the same thing over and over again. We're seeing further and further upside in the face of more people trying to tell us everything is overbought. We're even seeing Warren Buffett selling out his billions of dollars as well, but the markets just keep going up. Buffett's been doing that for over 10 years, and the markets have been up. Okay, Bitcoin and cryptos, we're finally here. 76 on the extreme greed. The main thing I see here for the short term are lower highs forming, lower highs, lower lows. So we're going into a bit of a pause situation here for BTC, but of course you're also seeing altcoins pop off, like your Dino coins at the moment, the Boomer coins, and eventually they'll also, people will be taking profits, and you'll see the cycle rinse and repeat. We're seeing that with the Google trend words here, Bitcoin and crypto. Bitcoin has dropped off a lot over the last couple of days, even a couple of weeks actually, coming in from whatever that peak was at 50 odd. Yep, 65, down to where it is now at 33. But crypto has had its move up. So this seems like the prime example of an altcoin season where Bitcoin pauses, less interest in Bitcoin, but the interest in crypto has continued on. So I think that trend is going to continue through for the rest of this cycle. We're going to see some wild volatile swings of people getting interested, what's going on next, but there's still going to be corrections along the way. Along with that is our Elliott Wave master, Michael Pizzino. My brother there, of course. You can also find his details in the video description. Go follow his channel. Just looking at the Elliott Wave, things are still on track leading into, well, from what we can tell, we're in our final wave, the major wave 5 into the top of the bull market, but that takes time. You can see the waves have taken many months to get to those peaks, and it seems like we still have further to go. However, It doesn't mean that we can't go into corrections, because within the major wave, you're going to get other waves that are going to be corrective or impulsive, which means to the upside. So we could be lining up for something soon for some sort of corrective wave here, move against the trend. The monthly returns for BTC, this one's an interesting one. You've got greens on November and greens for December. November is one of the better months for BTC. December, not as good. However, there's some nice things here. If you get a green November, what happens to December? So you got green and green, 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 green and green. And there are two here, if I'm not mistaken, where there was a green November, but a red December. So just looking at, and then you got a red November and a green December. So looking at those numbers, out of the 14 times, 3 of those weren't the same. So if November was red, December was red. If November was green, December was green. So that's roughly about 80% of the time, December follows November. Doesn't mean it could be a massive, massive pump. All it is looking for is just green. So even if we do get the correction this week, next week in December, it seems like, well, at least according to the data, 80% of the time, December will finish in the green. And for it to finish in the green, it has to close above $96,500. So interesting one that we got to play out for the rest of this month. What I want to also look at is taking off all of the bearish years and just seeing what the returns are like. So we've got 12 years, 8 of those are green, 4 of those are red, giving you around a 67% hit rate. But in terms of the where we are in the cycle, you can see 2013 was a massive November into the peak of 2013. And then of course, December was red. You got 2019, pretty red there. And then 2021 also followed the red because you had the peak in November as well. So if you took those couple out, well, then you're really starting to push it on the positive side, but now you're playing around with the figures too much. So we're just keeping it as 80% of the time, November is green. It seems, well, 80% of the time, you're going to see December as being green. So now it comes to the time frames. And this is where I think things start to get a little bit interesting with where we sit in BTC. We have 3 periods now of significant moves to the upside for this cycle. And within those moves, well, these moves last roughly around 30 to 34 weeks. Within those moves, you got around a halfway point. We like to look at 50% levels in price. We also do that in time. And that comes out at 16 weeks right here in the first one. And that's where the market basically stopped. You didn't really get any other gains above that point. The next move, you had around 30 weeks. You could basically count it up to around 34 if you wanted to, because you had the similar sort of thing here to this peak. That was around 33. But I'm really just looking at it where the price stops dead. And it stops dead at roughly about 30 weeks. Within that, 16 weeks, the price again stopped dead for the short term and then consolidated before it took off. So where we sit now is 15 weeks into the all-time high. Is it possible that we're stopping dead for now? That doesn't mean that we go on a massive correction or anything. It just means price needs to consolidate until time catches up. So if we are in that sort of phase, that could be what December is putting together now. As you can see here for January, it still went slightly higher, still corrected, and then continued to consolidate before the move happened higher into that peak of March. So if we're on that sort of trajectory, well, that could be December, January. We've got a bit of indecision here, pause, but I still think there's further upside to go for Q1, just based on these last couple of cycles here. And 30 weeks takes us through to the first week of March. So call it late February, early March. And if you want to run it out to 33 or 34 weeks, like a couple of these tops before the move to the downside got going, well, that would take you out to about the end of March, right? So somewhere in March, I think somewhere in the end of Q1 is going to be a good place to look out for some sort of major peak here. Obviously, keep following the charts. It's just some projections from what the market has done previously, and quite interesting to see that the halfway point has happened yet again. Price runs up and then basically stalls around halfway into this move. And of course, we don't have the end point of the move yet. It's just pretty interesting how the price has actually stalled again. We got the stall last week, and right now, the price is dipping down to 95,000. Next up are the monthly swings to the upside. How long can this go on for? Well, like we called with the March top here, we had 6 months to the upside, and that was it. It was basically price stopped. And that was based off how many times it could do it in the past. And you can see once it gets to roughly around 5 or 6 months, it's not impossible to get to 7, but it just becomes really unlikely that you're going to see any more than 7 months to the upside. So 6 is a fantastic stretch, but even if it got to the 7th, the point we were making at the time was that it's not really worth the risk. So even up to the 5th month, the risk really wasn't worth it for the 6th or the 7th. You get to the 6th here, and then the risk just was not worth it to be in the market anymore. So that's similar to what I've talked about here, where if we go up 6 months from the low, that takes us out to February. So it could be the entire month of February, and then into that March period, you start to get a rollover. That's if it lasts the entire 6 months to the upside. So keep a watch out for that as we lead into Q1. As you can start to see, we're building a picture here for not a straightforward December. You're seeing things pop off, but there could be that correction coming in. But I still see further upside just based on the time cycles here and some of the price targets that we have looked at previously. Moving on to more of the altcoin market. So we've seen the March signal complete, Bitcoin analysis. Now USDT and Bitcoin dominance before we get onto some of the altcoins quickly here. This one is probably one of the best charts that I've seen that has been on track with the Bitcoin cycle and the altcoin seasons as well. When this broke down in October, you see the breakdown and the close, we got a lot of movement out for altcoins, and then Bitcoin also started to move here. There's September and there's October, that nice big move to the upside. Now we had November, and the USDT actually broke down from the 50% level, and it closed underneath the diagonal uptrend. We're on a monthly chart here. This is where all of the previous Bitcoin tops, all-time highs, local tops have been formed. You had crypto tops at these areas as well, and the top side, you got the lows here at these peaks. This time, you're seeing a breakdown of that line with lower highs coming in, and I suspect this is going to be one of the big things that really drives more money into Bitcoin and cryptos. I'm very bullish on the markets when this thing finally begins to break down from this low here. So our first target was broken. That's 4.2%. That's at the diagonal, and where there was a bit of daily price support coming in. And now it seems like we might need a little bit more time here, but it's now testing the next support level. And these have been very, very key levels for the market. So 3.8%. You get a breakdown of this, could be some pretty big things down to roughly about 2.5%. So that's a lot of dominance leaving the USDT, tether that could be flying out into Bitcoin and cryptos. Now, on the flip side of that, maybe this money is going into profits. Maybe it's leaving crypto altogether and going into fiat. Maybe it's actually leaving USDT and going into some other new stable coin. That's also a possibility. But for now, what we have is a breakdown here could lead to more money going into Bitcoin and altcoins. Now, on top of that, you know my 50% rule here. This is a major one. And I told you about this with the selling altcoins and where to take profits. Now on the flip side, because this is USDT, you want to see this thing go down because essentially that means more money into Bitcoin and altcoins. And you can see what's happened here. It's hit 50%. It got rejected at 50%. There's the move, and it's coming down. Now it's broken the major 50% as well at 4.75. So if this breaks to the downside, it's rejected at 50, broken 50, I suspect there's far more probabilities to say that this is going to keep coming down. The only thing that could stop it, obviously a little bit of fake out here, close above, and then it comes back to hold these levels. So that's still a possibility, but with those 50% breaks, lower highs, everything going on in the background, you'd expect more downside here for USDT. So I'm very excited for that, to see what happens to the markets when that level breaks down. Same sort of thing here for Bitcoin dominance, something that I haven't looked at too much, but what I will cover is the weekly or the monthly swing bottoms here. You can see the swing trend indicator kept you on the right side of the market. Basically, Bitcoin dominance is up. Now we're seeing a breakdown of the 50% level of the entire range, and an overbalance in price, which means this correction for Bitcoin dominance is the largest one it's had since the 2022 cycle low. So that is also telling us that it's alt season. Obviously, many people are seeing their altcoins pop off, but now you're starting to see a few more of those signs to confirm these levels. The invalidation, of course, is closes above those levels, but it seems pretty likely that we're going to see further downside, even if there are corrections along the way for those altcoins. The next level I'd look out for is right around 54% to see if there's any sort of support that comes in, which then would hold up the market. And then further down towards the 50% level. So it's 50% of the range, which also comes in at 50.2%. So basically comes in at the 50% level. Be watching for any sort of support that forms for the dominance, which could then mean you'll see some slowdown in that altcoin season, and probably people calling that, oh, it's alt season's over, etc., etc. If you started to see a breakdown of this level, you got the tops here at around 48 and then the 50% level at 50. That is probably when things go a little bit more ballistic, like the big alt seasons where everyone's stuff is going nuts, but it doesn't last for too long. You can see there are 2 big months and then basically a big bounce from that point. The total cryptocurrency market cap for altcoins, so the true altcoin market cap, is also breaking past key tipping points. We've seen 2 of them already, the $480 billion level, which was 50%, and the tops are at 650. Now the final one coming in to the top. So I'll throw a few more of these lines back on. The next target level is about 1.05 trillion, which is just above the tops. Now along the way, this is a monthly chart, but along the way there are corrections. So be prepared. It seems like everything is lined up for the alt seasons to continue to play out. To me, it seems very obvious that we're in the alt season. It's time to be buying them. It was time months ago, but I still get questions from people saying, is now alt season? Is it time to be buying? So now is a little bit riskier. I think it's still possible, but it's just riskier because of the move that's already happened and any sort of corrections. The corrections, I think, will continue to come in at higher lows, but the stomach you need for that market could, in terms of the corrections, if they come in, it could be anything like 30, 40, 50, 60%, sometimes even more, like we're seeing on a lot of the alt or the meme coins at the moment. Popcat down 47%. It doesn't seem like it's over yet, but essentially that's kind of what you'll begin to see with any sort of corrections. Altcoins will do that through the alt season. The total cryptocurrency market cap has broken to new all-time high. So the previous one was the true altcoin market cap. This one is the total market cap. New all-time highs here. It is leaning its hand towards, if no correction now or no pause, January is typically that time that you would see that pause. You're getting several months up now. We're into the 4th month up. 6 months is what it's done before. 8 months it's done before. 5 months. So we're somewhere in that halfway, potentially on the other side of halfway of this particular move. The big thing to note here is not to let anyone tell you that it's just beginning. I mean, you've got the bigger cycle. You've got the 12 months perhaps. So there could be that longer period, like for example last year. But as we just said, it doesn't mean that you get this straight up line for 12 months. The correction in between will be enough to make people shit the bed and feel like they want to throw up, like they literally put too much money in, or they put too much in at the tops somewhere in that move, or they fucked up and they just did not take the profits. That is what will happen in this next 12 months. Mark my words. Something like that has to happen, because when you get this huge greed and this excitement, like you're always going to be making money, the flip has to happen. The pendulum always swings and you get this gut-wrenching, disgusting feeling. And then typically you get that sort of last little leg up, maybe a bigger leg up, which gives you that sort of second-ish chance. Just depends whether it comes in a lower high or makes it to that higher high. I think there's still plenty of time, but just continue to follow the charts as we will do here. Now, the next thing is Ethereum BTC. November close, we've got a nice high close on the month. You've got support coming up here. And in terms of the timing, we're pretty much on par now. If there is that sort of 5 months to the upside, that would take us through to about April. So things are lining up for late quarter one, maybe in this case it's sort of early quarter two. But that's essentially what I'm seeing with these markets. Could be a bit of a pause soon, in a short sort of pause or correction, but then further upside into that Q1, Q2 period before we see a bigger correction. Now that does lend itself to something similar like last time in 2021, where things just continued to pump. Then there was that solid correction, and then things got going again. So I'm aware that maybe people will all see that and they'll try to front run it, and it'll happen a little early. Instead of it being an April or May top, maybe it's a March or April top. But yeah, we'll just keep following the charts, seeing how this momentum continues on, whether it dries up or it's able to keep going and burst through a lot of these tops. So that's what I got for you guys today with the monthly update for December, an outlook for December, an outlook for January. They're the 2 months that I'm most focused on at the moment. And then what I think might occur for Q1, most importantly. Overall, everything is still up for the 18-year cycle through 2025. I don't think it's going to be an absolutely easy ride for everyone. I hope it is, but it doesn't. I don't know if the market's willing to give that to everyone after the last 2 years, 2023 and 2024, being straight up with 24% returns in 2023 and currently at 26% returns overall. So maybe we're in it for 2025. We'll wait and see. We've got more to get through with the US presidential cycles as well for the first year in the cycle for 2025. I'll cover that at the end of this month. And I'll see you guys back here at the next video. Don't forget the links in the video description. SwiftX is also giving a Black Friday sale here if you need an Aussie account, $30 free. And then, of course, Bybit and Bluffin down below. Catch you guys at the next video. Until then, take care and peace out.